Taking a look at the local unit, we've seen some weakness filter through to the rand this morning, and that where it held pretty steady in yesterday's session. It seems that all eyes are on what's going to be coming through from Jackson Hole, Wyoming on Friday.
Yes, indeed, we did see that rand trading in a very narrow range of about 717 to 722 yesterday, and we do expect, we still expect rand participants to sell into rand strength today, and in the medium term with a target towards 733. But as you mentioned, those concerns about what's coming out on Friday is really going to drive local sentiment as well. We don't expect we really do expect that the Fed could possibly disappoint the markets on the back of the fact that we're still seeing inflationary pressures, and also the fact that the quantitative easing that we have seen coming through in the past, the QE1 and QE2, did not really provide the kind of stimulus that was expected. So there's going to be some pressure coming through for the local currency.
How are you synchronizing that with the local economic data that we're seeing filtered through? Of course, today we see CPI numbers coming through, and then tomorrow PPI as well.
For the local data for CPI, we're expecting inflation to come in at 5% for July. This is the same level as we saw in June, but we do see that July is a really very high forecast risk month on the back of the fact that we're seeing city council rates coming through as well, which is really the electricity components and household survey data, which is expected to come through, and that constitutes about 47% of the total basket. So we could see some forecast risk coming through there, and we could see a swing of about 1 to 3% in the numbers. So we really do see the numbers do come in at about 5% year on year. Market expectations, however, is for an increase to about 5.2%.
Do you deal with this, though, one data point at a time, you know, whether it be out of local arena or from the international scene, or do you take a look at a view where international weighting is a little bit more at this stage of the game?
I think at this stage of the game, international weighting does play a major role. If you look at Governor Marcus' comments yesterday, she did say that the weakness in the global economy will obviously have some impact on the South African economy, and we believe that the fate of the South African economy really does lie in international developments at this point, especially if the US economy continues and global growth global growth outlook continues to deteriorate. The Reserve Bank has indicated that they will act appropriately even if inflation does remain within the target range for this year. We do believe that inflation will remain within that range and only breach the target within the first quarter of next year. But given that, we still believe that the Reserve Bank could possibly act on those numbers, or rather not the numbers, the slowing in economic activity. And the from markets at this point is still pricing in a rate cut for this year.